Hello, and welcome to another episode of the Seasonal Tokens Podcast, where Polar interviews people so you can do more investing and less gambling.
We already have the ability to transact outside of their central bank digital currencies. So I think the positive thing is that's going to act like a check. Maybe we might not see these really tyrannical, these really dictatorial central bank digital currencies. Governments might have to make them a little bit more open, a little bit more transparent, because there is a free market option in Bitcoin, in Ethereum, and these other currencies. So we might see freer countries adopt a little bit more open type of central bank digital currency. I don't think that's going to stop China. China's already had a central bank digital currency, and they seem to be going full force with surveillance and all those types of things. And those countries are going to do that. But I think there's going to be plenty of countries. I think there will be countries that adopt CBDCs, but because Bitcoin's acting like a check on those things, they don't want all of their people to flood over to Bitcoin. They don't want to say, we're so draconian that you guys have to use Bitcoin. I think they're going to want to try and be reasonable. So that's my optimistic spin on this.
Yeah, I didn't know that there is even an optimistic way of thinking about CBDCs, but thank you for explaining this to me. Like, I feel a little bit less, but very, very less scared than before the conversation. Yeah, not much different, but yeah. I hope that what you're saying will come to life and it will be like that, but I have my big doubts. But let's see, the future will definitely show. But yeah, like I said, this is a podcast for more optimistic things and investing. So let's switch again and talk a little bit about investments, because I know that you are very experienced in that too. So can you share with us what are the investment principles that you would advise someone to have in order to be a successful investor in crypto?
Yeah. Well, there's an entire chapter of my book devoted to this. And for your audience that hasn't gotten the chance to read it, I break this down. And I think it's really important to approach crypto investing in understanding that there's different crypto asset classes. So let's back up for a second. If you go and you're going to just start investing in the stock market, you're going to do traditional investing, you look at different companies you put them in different baskets. So for example, Facebook's a tech company. It's a social media company. You would look at that different than you would look at, say, Coca-Cola, for example. Both big companies, both multi-billion-dollar companies, but they do completely different things. One's been around for 15 years and, very powerful company in Facebook, but it's a technology. Coca-Cola's been around for, 150 years, be more stable. And so you would look around the market and you say, okay, well, here's a utility company. This is a gas company. Here's a vehicle manufacturer. You would break investments down into different categories. And so I think that we need to take that old wisdom of investing and just apply that to a new frontier like cryptocurrency. And so in the book, I break down, here's some different asset classes within cryptocurrency. So Bitcoin, it's like a digital gold or a money. Ethereum, it's a smart contract platform, or Cardano or Tron or EOS or Solana. There's all these, there's a whole group of blockchains that are smart contract platforms. And then you go beyond that. And then there's Oracle protocols, which are a really important component of smart contracts. And then there's NFTs, and then there's DeFi, and there's decentralized exchanges, which is kind of like DeFi, but it's kind of different. So it's important to break things down into those different asset classes and identify what it is that you're investing in. I don't only invest in Bitcoin. That's my favorite because I think it's good money. I think it's digital gold. I like how the supply halves. I love how there's only 21 million ever. I like the fact that so decentralized, all those things we talked about earlier. So Bitcoin's my first and kind of primary investment, but I do go outside of that. And so when people ask me off the street, they say like, I heard you're into Bitcoin and cryptocurrency, but what's the difference between Bitcoin and Ethereum? Like, are they competitors, or are they both, the same thing and they're just trying to compete for the top spot? And I said, no, not at all. Think about your iPhone or think about your smartphone. On the iPhone, we have Apple Pay, which is like how you go around and you pay for things. And then there's also the App Store on the iPhone. Those two things aren't competing with one another. They're two parts of the iPhone. So one, if I'm going to go check out and I'm going to buy a soda, I use Apple Pay. If I want to download Netflix or if I want to download TikTok or any kind of app, I can go to the App Store. They serve two different purposes. And so when you say things like that, people are like, oh yeah, that makes a lot of sense. Like decentralized applications versus gold. Like those are two obviously different things, but why do NFTs matter? NFTs are a really important thing. I think right now it's a very fun era of NFTs. We're seeing more fun gaming applications to it. I think the long-term implications of NFTs are going to be property rights. I think that there's going to be, I just released a video on my YouTube channel the other day about the integration between 3D printing and NFTs. I think that, in the not too distant future, you're going to go into the metaverse. You're going to pick out a pair of Nikes or some sort of shoe that you like in your home office. Instead of just a printer that prints paper, you're going to have a 3D printer, and you bought the NFT. So Nike's giving you the permission to now print your own shoe from your house. Nike doesn't have to spend money on shipping. They don't have to spend money on manufacturing, any of that kind of stuff. They get pure profit. You just bought the NFT. Now you get to 3D print your shoe in your home office, and it's ready to go. And so I think there's some really interesting integrations from technologies that are coming around the corner. But yeah, NFTs are different than Bitcoin. They're different than Ethereum. They're different than oracles and stuff like that. So that's the first thing I would do in investing is identify what asset classes you want in your portfolio, and then pick an allocation. Like, do I want 60% of my portfolio in Bitcoin? And I want 30% of it in this. I want 10% of it in this. Maybe you want even percentages across the board, but that's a good way to kind of start looking at investing in cryptocurrencies. I think that's my personal opinion.
Okay. Perfect. So we both know that there are so many people out there that are calling themselves experts, that are giving a lot of, let's say, bad information that is misguiding people very much, and they're losing money because of that. So my next question for you is, are there any advices related to crypto investing that people are hearing all the time, but they're guiding them in the wrong direction based on your experience?
Yeah. First off, I just wouldn't take a YouTube video or a social media post as a good reason for why something's going to go up or down. I've thought a lot. I don't have the time to do it, but here's a free idea that if anybody wants to start a YouTube channel that I know would absolutely crush it, take all the predictions that people make online about the price of a cryptocurrency and do a before and after video and just show everybody whether they were right on that price. Because you're going to get the price right sometimes when you make a call, but more than not, these people, they just don't know. And so I remember I paid a lot of attention to XRP in 2018, 2019. I was just doing my homework on XRP to see if there was something really there. And I think they might have their niche within banking transfers and stuff like that. But as I was listening to people in the XRP community, they have a really strong community. And I remember hearing all the time, they would say, some insider from XRP said that XRP is going to go to $100 this month. Or, some person knows this, the chief technology officer says it's going to this price. If you know anything about economics, it doesn't matter. You could have the best technology tomorrow. You can do something, that, we're going to make a big announcement tomorrow and this is going to, rock the world. That doesn't mean the price is going to change. When I worked at Ethereum, I was the chief marketing officer. I had no idea what was going to happen to the price tomorrow because I couldn't determine what market forces were going to happen. We would make a big announcement and the price wouldn't go up. The price might go down the next day. We'd make we'd announce some new users or some cool segment of the project, and the price would go down. And then one day the price would shoot up. It'd go up 40%. And we'd find out that somebody tweeted about us and it went viral or something like that. And we had no control over it. So just because an insider says or a chart person says that I know that the price is going up, that should only be like one part of your research. It doesn't mean that you completely disregard that, because there are people out there that have really good insights. There are people that look at charts and it can be an indicator, but it's not a golden ticket. It's not like a crystal ball that tells you the future. You have to make that one part of your kind of investigation. That's another thing I talk about in the book is I go through my process of how I pick things to put in my portfolio. And a lot of it, one of the simplest rules I have is that I'd never invest in a cryptocurrency unless I've known about it for at least 2 weeks. And that sounds stupid. It sounds like you should probably know about something for a lot longer than 2 weeks. But the reason why I put that in there is because I remember when I was new investing in altcoins, I'd only invested at the beginning in Bitcoin for a while. And then when I started investing in altcoins, I remember I would hear about an altcoin and I was like, I got to jump on this. And so I'd run out and I would buy it that night. And then I would find out in the days after it, like what the project even did. And, I didn't know anything about it. And so I found that if I just told myself I'm going to wait at least 2 weeks to do my due diligence, then I can let some of the excitement wear off. And hopefully that gives me a little bit better perspective on the project. Am I still excited about this project? Or is it just because somebody told me it's going to the moon? And if I don't buy it tonight, then I'm going to miss out. Like, that's not a good way to structure your investments. It's just, that's a good way to go poor over the long haul, is by always going off of somebody's hype or a really compelling tweet or something like that. All those things can factor into your decision, but those shouldn't be the end all be all for why you buy into something. Do your homework. Watch. Hopefully your community's sitting here and they're spending time listening to you talk about, your project. And it's through that process of kind of sitting in something and thinking about it, thinking on it for the long term. That's how we kind of really find conviction in the things that we invest in.
Yeah.